Hello, everyone, and welcome to another episode of The Good, Bad, and Ugly of Business. I'm your host, Catryn Becker, and on this podcast, we love to interview all sorts of different successful people because we want to learn what's made them successful, learn their secrets. More importantly, we want to learn from their failures because while a smart person learns from their mistakes, a genius learns from the mistakes of others. So in today's podcast, we have another fellow engineer on here with me, and we are going to learn from his journey of how he went from civil engineering to having quite an incredible community of syndication for real estate investors, but as well as just making that leap from the safe corporate role into the unknown. So Lane Kawaoka, wow, I just totally butchered that.
Yeah,
Let me try that
Kawaoka.
again.
Yeah.
Lane Kawaoka. Lane, welcome to the show.
Yeah. Yeah. Thanks for having me. Aloha, everybody. How's it going?
Aloha indeed. You are coming to us from Hawaii.
Yep. I mean, I live where you want. Invest where the numbers make sense. Yeah, I was spent a lot of time in the Pacific Northwest, but a little too cold up there, so I decided to move back home. And that's, when you run your own business and you're location independent, you kind of choose where you want to be.
And that's kind of the dream, isn't it?
Yeah, I mean, you're trying to live the dream, although does seem like the new rat race, as they call it. But yeah.
Well, you and I both share the background in engineering. I did environmental engineering for 20 years before deciding to make the shift, and you were in civil engineer, right?
Yeah, in industrial. I mean, undergraduate, I was in industrial because I wasn't a very good engineer, so that's typically one of the easier ones. But yeah, I mean, I was never a good academic, right? And that kind of, starts my trajectory from there.
Well, you had to have been pretty good. I mean, getting an engineering degree is not an easy feat, no matter which kind of engineering degree.
Yeah, I mean, I was always goal oriented. So like one day in high school, I Googled like what's the easiest major to get the most pay without having to go to grad school. And as we all know, that lights up engineering, all of them, right? So I was very goal oriented to become an engineer so I could get out of college and not and spend the least amount of money there to get the most amount of pay. But that was I mean, I was good at math and science. I don't know if that counts, but that kind of we're all kind of pushed down these things that I call like the linear path, right? Go to school, study hard, 401k, pay a lot of taxes, buy a house to live in. And that was, I mean, it's kind of a boring story, right? Like, sorry, I wasn't broke, wasn't live on the streets or anything like that. But, I think I do speak for a lot of, hardworking shrinking middle class Americans out there.
Well, and I don't think it's that it's a boring story, it's the common story. I had the same experience where it was okay, you go to junior high, you go to high school, you go to college, you get a job, you buy a house, you get married, you have kids, and voila, you're done. And then it was like, am I though? It really feels like there's more for me. So
Right.
what made you start looking for other opportunities and what led you into real estate?
Yeah, I mean, so right after I graduated, I started to work and I was always kind of brainwashed to like buy a house to live in, save my money. I was the kid who had like a Roth IRA when I was like 14 because my parents taught me about that type of stuff. Um, you never want to be without, right? Or, the scarcity mindset. So it took me a couple years, but I saved up to buy a house to live in. And because I was in construction management, you travel around for work a lot as a new kid. And I was like never home. So, here I am in my early 20s and I'm like, well, that's kind of silly to have this big house to myself. So that was kind of where I started to rent it out and just, got this taste of like passive cash flow, right? Like, I mean, and like, how rental property owners, they make money four ways with mortgage pay down, appreciation, tax benefits and the big thing, which is their tenants are paying down the mortgage instead of you are. And
Right.
I realized this whole world of other accredited investors investing outside Wall Street and paying little to no taxes legally. And this whole world kind of got uncovered to me. And the analogy I use, it's like at the end of the Wizard of Oz, like when they peek behind the curtain and they realize the wizard isn't real. In a way,
Mm.
that's kind of how like traditional wealth building is. And, it took me a while. It's not a get rich quick scheme, but like if you are able to save 10, 20, $30,000 a year and you plow to buying, real investments, not going through the normal Wall Street methods, you're able to, quickly compound your money and then eventually fire the boss.
Yeah. Well, I mean, I don't know about you, but you did mention that your parents, at least introduced you to the topic at an early age so that you were aware of it. But I mean, in my engineering degree, I took a micro and a macroeconomics, and that was like it on finance. Even going through my MBA, I also feel like there was very little that kind of really dives into these kind of concepts of what you would learn for real estate, and even like owning your own business to some extent. So, what was that part of the journey like for you? Learning these things, applying these things, kind of overcoming what we've been trained to do, which, being, oh, you got to go to school to learn those things.
Yeah. I mean, I think I'm in a safe space to say this. I mean, most people here would probably agree that what you learn in college isn't really practical to any kind of career. And I would say, especially say personal finance, which is kind of what we're talking about here. And I do think that most people get it, like they put their career first, and I get it. That's very honorable. But I would say don't forget what the main business is, and that's you, and that's your personal finance and you building your net worth over the long run. And to do that, you have to make good investments that make more money for you that eventually you do at your day job. Some people think that's disloyal. I mean, with people working less and less at, long-term careers and being very transitory, I think it's very prudent, especially, with, the next recession supposedly is on its way, right? Like there is no loyalty out there. And very early, I mean, one of my big failures when I was starting to work for my private company was quality of life was horrible. I mean, here I was in my 20s, I was getting paid a great salary and I was learning a lot from a Fortune 50 company. But, I quickly realized that, I was just sort of a pawn in the game.
Yeah.
And if I was smart, I would take the income I made, be a little frugal with my expenses so that there's, net savings at the end and plow that to investments so I could grow different investments so I could replace my day job. And you're an engineer, I'm an engineer, like it doesn't take an engineer to do this type of investing. I know what you don't really want to go too much into it, but if you find a property that rents for 1% rent to value ratio or better, where you take the monthly rental price divided by the purchase price and it's 1%, you're pretty much there. Like so like a take like a $250,000 property that rents for 2,500. That's 1% or higher. That's about the basics you need. I mean, this isn't rocket science here,
Yeah.
right? And you just rinse, wash, repeat. And that's what I kind of did my first decade of investing. Just pick up these little rental properties and just build your net worth, build your portfolio, and quietly work your day job and keep your head down was kind of the status quo for me.
And you've amassed some pretty impressive numbers. I think something like 2.1 billion was the number I saw on your sheet of assets.
Yeah, I mean, that's today, right? I mean, today we run like an institutional private equity company and, we have investors come in, but I think the amazing part and more practical thing for people listening, I mean, first property I bought was 2009. And then I think 3 years later, I bought a duplex. And then a couple of years later, started to buy more and more. Eventually had 11 rentals in 2015. So it took me like, I think 7 years to get up to that double digit mark. But I mean, it takes a while to do this in the beginning, but eventually you hit that hockey stick
Yeah.
where, the beauty of working your day job while you're doing this is you don't have to eat the cash flow that comes from the property. You can use that cash flow and your day job to go create more and more properties, mini pensions, as I call it.
Mini pensions, because there aren't pensions anymore. I mean,
That's correct. I mean, that's one of the big paradigm shifts that we talk about in the new book, The Wealth Elevator. We're all taught this lie where you're supposed to build up this pile of money and wait to the end and just, live off the pile, right? At 4%, 5%. If you're smart, you don't eat at the principle of your pile, right? You try to live off the cash flow of it. But here you are, you're trying to at the very end, trying to switch from like an index ETF portfolio into a cash flow portfolio. So I think this is Stephen Covey says, begin with the end in mind.
Mhm.
So why not begin with these stream of cash flow today? And that's what a portfolio of little rental properties here and there basically is. It's basically breaking that big pile up and cashing in those cash flow streams now. But don't be a dummy and buy jet skis and cars with the cash flow now. Buy more and more pile mini, pension babies. Another way of thinking about it.
Have your little minis have little minis of their own.
Yeah. Yeah.
So you started doing that, but you created a community with it. And, people always are surprised to learn that I'm an engineer, especially when they meet me now, because people have such a mental image of what an engineer is supposed to be like. And in a lot of ways, I think the engineering mind is what is interesting about being able to see how things work together and being curious about how to improve things and optimize things. At least that's how it works for me. So when you're having these, being able to bring communities together, it's not something that typically people think about for engineers. So what sort of was your thought process in putting together these communities and bringing in all of these different accredited investors?
Yeah. I mean, believe it or not, I'm an introvert too. I mean, I'm a totally different person when I'm not talking about finances and money or podcasting. And when I first started to do this, it was very critical I meet other accredited investors. And that's kind of where I learned all these best practices that, the wealthy do, right? That the common person, my parents never even was aware of it. And I needed to, get out of my shell and meet other purely passive accredited investors to learn this type of stuff to build my network around me. So I know how important it is to, get yourself out of your comfort zone, especially get in the right circles. But that was kind of where like it was hard because the only things out there in this world, if people are in the real estate or investing world, are all these like frugality groups and like real estate club, and not to offend anybody, but I'll just call it what it is. A lot of broke people, right? A lot of people who
Yep.
don't even make 50, 60 grand a year that are thinking real estate's a way to get rich quick. And they're not even to like in my book, I have these levels that we kind of categorize people. It's kind of messed up, but it is what it is, right? Like I wanted to make a book for more wealthier people who had at least professional salaries, right? White collar jobs, because there was nothing out there for that. Most of the things out there are kind of scams, get rich quick
Mhm.
schemes out there. But what I realized as I was kind of moving up this wealth elevator, that there's different paradigm shifts and strategies to based on where you're at. If you're in the basement, which is under $500,000 $1 million net worth, you're getting started. And yeah, there is some need for community, but that community really changes when you get above $1 million net worth or accredited investors who make over $200,000 a year at their day job, which, I mean, people always like flame me on like YouTube and they think I'm like some a-hole who like only talk like who has the money to buy one rental property, like, well, a lot of people do,
Yeah.
and they want to be good stewards of their money and create a legacy for their family. And that's what I wanted to create was, I mean, it was almost selfish too, right? I wanted to create a community of like-minded people going on the same journey as I did. And, the people needed to be vetted, right? That's a huge part of any kind of community. It needs to be highly curated. If not, it's a waste of time.
Sure.
Like the quality of people isn't going to be there. So I took this, the kind of like, I don't know if I call it anal attentive, but like it's kind of funny. Like you got kids too, right? Like my
Yeah.
my 3-year-old is like, she cut all the skin off the apple. I'm like, you're weird. You're weird. Maybe you'll be an engineer one day. But I think that's how we are, right? We see problems and we see like, all right, we're gonna have last weekend we had like an event for my investors in Hawaii, for example. And everybody's introverts, just like me. Maybe because I attract that. Who knows? But how can we create the evening where it's like a structured event, right? So every hour we have like a little topic that lasts for 15 minutes. The topics don't really matter. It just gets people moving around in the room so they're not
Sure.
stuck with the one guy that they feel safe and comfortable with. for the whole evening, right? And so you can best get people around and meet other people in an engaging environment. We'll do table topics and stuff like that, but just basically get people going in groups of twos, or try not to make it too big, right? Like we want to facilitate those one-on-one connections, the relationship buildings. But I've done this quite a while, so I'm kind of used to it, but you learn by doing, and I call this like structured networking, right? Having some type of like, put some thought to the dang thing, right? As opposed to just some random mixer.
Yeah, absolutely. Because I mean, if it was a group of, extroverts, right brainers, you don't need anything. They will make their own, but it makes sense to have something to start from, a launching pad for making people feel comfortable, because at the end of the day, you kind of want that in your group. You don't want people going someplace where they don't necessarily
Yeah.
feel comfortable.
Yeah. I mean, you want to make it inclusive for everybody, but what I started to discover was, like, especially in my community where everybody is $1 million net worth and greater, there is a huge need for privacy.
Mm.
Yeah, like, so I think a lot of people, they really want to be in curated groups where, I mean, everybody who comes, I have calls with, I know personally, no random weirdos is kind of what I say. And if there is, I tell people, let me know right away, we'll remove them. Um, but that's kind of where it's like great care is kind of put into curating, the type of events, and it's usually smaller too, like in the less than 20 or 50. 50 is kind of our average size of our annual retreats that we have. Um, but yeah, it's a fun time, right? When you're able to kind of curate it and get it the right way.
Do you plan on growing that group, or do you feel like it's a good amount of people and you're happy with the size, and if it grows, but it's not something you're focused on scaling?
Um, it would be nice if it was a little bit bigger, but I've definitely, I mean, one year we had it like it was like 80 people, and it was kind of getting a little big at
Mm.
that point. Um, the thing is, like, I think what's interesting about our group is, like, we have a lot of like really busy, high paid professionals, and they're on the family years. Like, most of my clients are in their late 40s, early 50s. So it's the busiest time. I mean, I don't know. My kid is younger, but I'm only assuming, right? Because that's what they tell me. And they just can't come continuously. And it's a lot of it is just like meeting a few good people, figuring out who your clique is, and that maybe 3 people, 6 people that you get along with, and you stay with them. And you don't need the big group, right? The big group is kind of just is the barrel that you shoot fish in, right? The
Mm.
saying shooting fish in a barrel. But I tell people the goal is to find 3, 5, 6 people that you really get along with, and stick to those people like sticky rice. And then just, then you don't really need us, right? Sure, when you're retired, hopefully in your 50s, and you got nothing better to do, come back and help the community out, right? That helped you get
Yeah,
started
give
and
back.
get on the right way. Or as we say, send the wealth elevator back down to others. But that's kind of the dynamic that I've kind of seen. So it's a bit of like a revolving door is what I've noticed it.
Oh, interesting. Well, we've talked about the book now several times, so let's actually talk about the book, The Wealth Elevator. And um, what was your motivation in writing it, other than just wanting to give back?
I mean, there was really no book out there for accredited investors, people that had $1 million net worth or greater. I wanted to write it for kind of the young professional nephew who, got paid $150,000 right out of college, and the person who already had $2 million net worth that have never owned a rental property in their 50s.
Hmm.
Right? The whole idea, and you'll like this, there's a chart in there because it was written by an engineer, right? The chart tells you which floor you're at based on where your net worth is, and where, and what you should be investing in, what kind of risk tolerances you should have, right? You'll love that, right? That part. But that's the kind of the idea is, like, we take you through the journey, right? Here's what you do on the first floor. Here's what you do on the second floor. Here's what you do when your net worth goes over $4 to $5 million. Here's what you do when it goes over 10, right? Nobody has really outlaid this out, right? And this, I thought it was so necessary because it's written for first generation millionaires like myself, right? I didn't have a rich uncle. My parents, you know, growing up, they didn't have $1 million,
Yeah.
right? Who do you listen to? Well, then there's all this other garbage out there that tells people how to flip houses and wholesale houses and do all this like e-commerce. And, that's all for kids, right? Who have too much time on their hand.
Right.
But what do you do when you're like a working professional with a family and you don't have that much time, but you got a little cash, right? There was nothing put out for that specific thing.
Because that's
And
really the trade-off, isn't it? Whether you have the time or the cash, in
yeah,
generally
yeah.
speaking.
And a lot of these, like, especially in the real estate world, and I guess in the entrepreneur world, you probably see it, right? There's a lot of these programs that are just kind of led by some guru that's just a pitch to sell an e-course or some kind of mastermind program. And yeah, it works like 1% of the time, but what's really the repeatable thing that you can kind of do with the least amount of effort and risk?
Mm.
You know, so we kind of teach, like, what do the wealthy do in terms of taxes, right? Using passive income and the passive losses that they get from the depreciation of real estate to knock down their passive income. And some people are even able to implement real estate professional status, reps for short, to knock down the ordinary income. Some even down to zero. I mean, most people in our group, they're paying about 35% in taxes. Usually we can knock off maybe about a fourth of that right off the bat by doing some really like low-hanging fruit type of things.
Yeah.
But this is a lot of the stuff that I wasn't taught, right? Like we were taught like, oh, invest in a 401k and defer your taxes, or this Roth IRA thing. I got news for people. Like, the wealthy are doing things very, very differently. But the frustration that I had was it's not something that the average person can't implement. Right? It's very attainable. And that's what I kind of sought to kind of put out there. Hey, see it, come with it with an open mind. Figure out if this makes sense to you. And it does. It makes a lot of sense. But that's the problem, right? And I think that's why we come back to community. Most people, myself included, were stuck in the cubicle land where you're listening to, people who've been working there for years and the old guy about Social Security and this and that. Why the hell would you want to listen to Jerry, who's been there for 50 years doing the same thing about financial planning? He's the absolute worst guy I'd want to talk to. And we include that to most CPAs. Most of our clients change their CPAs. Why? Because the CPA is still working his day job. He hasn't figured out how to use real estate, passive losses, Section 179 losses to lower their income. They're just clocking the or punching the clock, trading time for dollars. You don't want to take financial advice from that guy either.
Right. Right. And yet they're put as the people that are the most to look at. And if they don't know other people such as yourself to be able to learn from. So, you've done such an incredible job with your podcast being in the top 50 for investing. You've been doing it for a long time. Do you think you'll ever get tired of doing it?
Probably. Yeah, I think when I get to be 50 years old, which is maybe another decade from now, I'll get tired of it and just call it good. But I mean, I'm surprised. I mean, we've been doing for like 400 something episodes. I would have thought that I would have like stopped doing it by now, but apparently there's more to this wealth elevator thing.
It keeps coming, right? So you're going to keep sharing?
Yeah, I mean, not to say we just make content to make content, but in reality, it is kind of simple, right? Invest in alternative investments. Number two, the taxes, alternative tax strategies, and number three, privatized banking. And that trifecta right there that's pretty much it, right? You just utilize these three strategies that the wealthy do in conjunction with each other, and that's how what my thing is, like, it takes you about a third of the time it would have you otherwise. Most people are super frugal in the FIRE community, which is the financial independence retirement extreme, where they're super cheap and frugal there. They don't eat lattes because they think it's too expensive. But most of those guys with extreme frugality, they'll get to financial freedom in like their late 50s. But doing it this way, you get to kind of, it's more on that fat fire mode where you kind of spend freely. You're still pretty frugal, I suppose, in the earlier years, but you get there, I would say, in about a third of the time you would have otherwise.
Do you feel successful? I mean, when we started this conversation, you mentioned that you Googled, like, what is the, easiest job or degree to get the most amount of money. So obviously money was a motivating factor. Do you feel like you're a success, and how do you define success?
Um, To me, I mean, I've done some like self work at this. Like, I'm kind of different from most people, right? Obviously, why we do all these podcasts and write these books. For me, it's about impact, right? Like, I think this stuff changes people's lives, probably way more than intermittent fasting does for some people, or like, doing a bunch of yoga, in their own, in this financial way, right? Like, this is my way of, I think that really helps people because it helped me, right? It changed my life. I mean, it very early on, like 5 years doing this type of stuff, I made more than my boss's boss. And I had this attitude of like, look, I'm gonna do my job, but I'm gonna do it with people I like, and it gave me choices.
Mm.
And that's what I want people to have, right? The freedom to do what they want with whom they want, live where they want. And, they're going to keep working at their day jobs, but maybe this gives them some choices to call it quits or not work for somebody that they don't have to. Or, some people will have their spouse stay at home and pay less taxes at the end of the day using rep status, like this thing unlocks a lot of possibilities for people. And money is not everything, but having money makes life a lot easier, I think. But this is kind of the wealth elevator project is kind of the whole way of like putting it down. Like, there's a lot of different strategies, I think, and that's the hard thing. It's kind of complicated too when you really start to dig into it. But it is very like, it's an uphill battle because there's a lot of like Wall Street companies, Fidelity, Vanguard, selling their investment products, and ultimately they're just taking the hard work away from all the Americans out there, right? By all these hidden fees, and then the people have to pay a lot in taxes. Like, it's kind of a broken system, and that's kind of why I do it. It's a little bit of a vendetta, if you ask me, or
You're just
vigilante.
re-engineering it.
Yeah, yeah. I'm a big on like vigilante stuff, right? Like, where like the people rise up and do what's right. And
Okay, so what's your vigilante name then?
um the wealth elevator, I suppose. I mean, that like something that came to mind. I was watching a YouTube video of like these guys. Like, I guess New York has a lot, like a big rat problem, and like, the city doesn't have enough money. I mean, I used to work as a city engineer. I mean, they don't have money to help do this type of stuff. So like 20 dudes got together, and they just got their little, I don't know if they got guns, but like just started to go and hunt for rats. And they would bring their dogs, probably drink some beers along the way too. And it became this thing, like I think that's cool.
Well, it sounds like you like having the power back in the people's hands to truly have empowerment.
Yeah, yeah. I mean, I don't know. I mean, I'm still kind of searching, right? Like, at some point when you stop trading time for money, you have the time and the leisure to kind of think about these types of things. So perhaps I've had a little bit more time to think about it than the average Joe. But you got to figure out what brings you happiness, right? What kind of motivates you. And then, it's that whole pursuit for, they call it ikigai, right? Do what you like, do it with what's good for the world, what people
Mhm.
appreciate. It's that alignment of, um, you know, usually when you follow that, you build something big, and you find happiness through it all.
Well, it's like Maslow's hierarchy of needs. Once those sort of base needs are met, then you get to start thinking about those other things.
Yeah, yeah. And that's why when we work with people, like, I definitely see people's mind shifts change, right? In the beginning, they were probably like me too, right? Really frugal, cheap in a way. You don't want to talk to nobody because how is that going to help me save money or get me another 100 grand in my net worth column? But usually, once people get above 1.5, $2.5 million, things kind of change, right? When relationships become the currency of the wealthy, and that's maybe, I'll say, like, don't want to put fear into people, but like, if you don't do it now, by the time you're 55 and older, it's too late. You're not going to meet any new people at that point, and you're
Yeah.
just going to be kind of a grumpy loner in your older years, or hang out with the poor people that you hung out in high school or college or young adulthood. And that's
Well,
kind of why we tell people we'll meet other people along this financial journey, because this is going to be, maybe not, doesn't replace your social group, but, add on to it.
or at least elevate it. Because what's the saying? Like, what's the best time to plant a tree? 30 years ago
Yesterday,
or today, or
yesterday.
right? At least you got to get it done. So thank you so much, Lane, for being on here and sharing all of this with the listeners. I truly appreciate your time um, and your dedication to helping others to learn and to share what you've learned. It really it's a very noble cause, and you know, you've touched many lives and will continue to touch many lives, and that's incredible.
Yeah. Thanks for having me.
So, what's the best way for people to get in touch with you?
If they're a podcast listener, they can check out the Wealth Elevator podcast. If they're a more visual learner, we got the YouTube channel. A little bit different content goes on one than the other. Apparently, the YouTube people have a little bit shorter attention span, so a little bit shorter videos on there and webinars. But we encourage people to come to thewealthelevator.com, which is the central website. But if people have any questions, feel free to reach out, team@thewealthelevator.com.
And is that where they can purchase the book?
They can go Amazon. Yeah.
Amazon. Perfect.
Yeah. We know what's up. It's a monopoly. We'll go with them.
Well, thank you so very much.